Hello traders everywhere, Adam Hewison here, and I hope you all had a great weekend. Well, it's another week of trading, and the big news, to me anyway, is the fact that we've readjusted the price for Apple to reflect its new share price, which is currently trading at $93.02. You may remember that this stock was actually at $700 at one time, and now it's at $92. So all I did was split the stock. So if you had one old stock, you now have 7 old stock. It doesn't change anything in Apple, but psychologically it may seem less expensive for a lot of investors and may allow them to buy shares which they would maybe shy away from when it was $600, $700 a share. But the reality is Apple wants to try to get included into the Dow. Now I'm looking at a chart of Apple going all the way back to 2006, and I'm going to draw some of our trade triangles in just to show you how powerful they are in terms of the trend. So the first one comes back right here. As you can see, a nice move up. Then it was exit, get in here, out here, in here, and nice run up here, out, in again, nice run up here, out, and finally in again. So you really catch the big moves using our trade triangles. That's one of the endpoints I'd like to emphasize, and also it's easy to follow. Just think of a green triangle. It's like a green monthly trade triangle like here. Boom, you want to be a buyer, you want to be trading with that trend. The weeklies give you the buy and sell signals to get in and out, the timing rather, but the monthly is a key one for the big trend. So let's look at the internet portfolio and where we're stationed right now in each of those major stocks we mentioned. So let's go right to the charts. We're looking at a 6-month chart of Amazon. That's right, the juggernaut retailer. And the first thing I noticed with this stock, and this is what I really want to share with you, is that our monthly trade triangle is negative right here. You see? Indicating the trend is down, even though we've had a little weekly here, which indicates you should be out. Okay? You could have shorted the stock right here, and that's right around, let's say, the 360 area. And you would have covered it right here at 312. You would have made some money on the downside on this move down. So you're out here because the trend is down, and there's the monthly trend again, indicating this back in February is indicating that this stock was going to have problems, and look what happened. So again, the monthly trade triangles for trend, so I can't emphasize this enough, and the weekly here for timing. That's how we do it, and it proves to be successful. This particular portfolio had a 67% return last year, and it's off to a very good start this year. So let's clear that screen and go to our next stock in our portfolio. Next stock we're looking at is Netflix. Netflix, as you know, streams videos, sends you DVDs and so forth. But again, the monthly is down and the weekly is up, indicating you should be out of this market completely. When you have two conflicting indicators like that, you should be just on the sidelines. Remember, monthly trend is down, weekly trend is up, you're on the sidelines. Our next stock is Facebook. Now this is a little bit different picture from Netflix, and as you can see here, you actually have a monthly trade triangle that's up, so that's the trend. And you have a weekly trade triangle that's also up. That's for timing. So what you should be doing in Facebook is actually be long. And you would be long from 61.48, which is right here. Market's currently trading at 63.17, a little bit of a profit, but it looks like it's making a nice little base to push higher. Again, trade with a trend, and the trend in Facebook is positive right now. The next stock we're looking at is Yelp. Now Yelp does all the reviews on the restaurants. It does a pretty good service, I think, but the reality is it hasn't done very well in the market. You can see we've had a nice move down from pretty high up, and again it shows you just how the weeklies work. So prior to the trend moving down here at 66.47, the trend was up, but the last buy signal we had was right here at 65.99 on December 17th. That was an exit signal right here at 89. So you can see from 65 to 89, it's $24 profit. And you're out of the market because the trend is up, but you have a mixed signal. The weekly's down and the green monthly's up at this point in time. So you're on the sidelines. You get short here, at 66.47, which is reflected right here in the trade triangles, and you covered that position right here at 61.63 for a very small profit of about $5, but still a profit. So the market is mixed signals. Remember, we talked about when it's mixed signals like this, when you have a monthly like here that's down and a weekly like this which is up, what is that? They don't match, so you're on the sidelines when that happens. Okay? Pretty simple. And it works, and this is the key thing to remember. This is the stock Yahoo. Yahoo basically has the monthly and the weekly in conflict. So what do we want to be? On the sidelines. Yes, that's right. So last signal was right here at 34.45. You've covered that today, 35.17 for a very small loss. And that's the key. Try to keep your losses small and let your profits run. That's the key to being successful in the marketplace. Hey, we've covered all the stocks in our internet portfolio. We had a very good year last year. We're in a good year this year. As a member of Market Club, you have full access to the World Cup portfolio, which is another portfolio that we run, the internet portfolio, and the perfect portfolio, which is for IRAs and 401k plans. Hey, I'm Adam Hewison. Thanks for watching, and I'll see you soon. Ask about any market and get an answer. Only for members and only from MarketClub.com.